Hello, this is a video on the enhanced carryback scheme, and this is a scheme that is announced during the budget 2020 as one of the measures to help businesses basically to take over the current COVID-19 situation. So now I'm going to extract this particular example from Annex A of the circular that is issued by IRAS. Is actually from the e-tax guide dated 24 February 2020. So if you want to look at the example, you can anytime refer to the e-tax guide and the example within the e-tax guide. So basically, I just want to try to explain how the enhanced carryback scheme work, because it is not the same as what we is currently adopting, which is the 1 year carryback. So for this scheme, why is it called enhanced? Is because basically for the unabsorbed items that is from YA 2020, you can in fact carry back for up to 3 years. So I'm going to use this opportunity to demonstrate to you how we go about doing this carryback scheme for the enhanced system, carryback system. So basically in this scenario, I'm going to put forward to you three YA 17, YA 18, and YA 19. So let's assume that we are not in YA 2020 yet. Okay, so let us imagine that we are in tax paying position in both YA 17 and YA 18. So let's say the AI for YA 17 is 96,000 and YA 18 AI was 190,000. Now these are the figure before any carryback that was done. Okay, so assuming that YA 19 you're in a loss position, and assuming that the company has unabsorbed CA of 150,000 and unabsorbed loss of 2K. So in fact they can opt for carryback to YA 18. So as far as YA 19 carryback scheme is concerned, you can only carry back up to 1 year, and the total amount of unabsorbed item that you can carry back is actually kept at 100,000. All right, 100,000 basically is only consisting of the CA and the losses, and collectively they are known as qualifying deduction. So if I were to demonstrate to you the carryback system for YA 19 to YA 18, so first thing first, we have to carry back YA 19 CA to YA 18 to offset. So we will do like this, less YA 19 CA. All right, and because the cap for you to do the carryback is only 100K, so therefore I can only carry back 100K of the YA 19 CA, and as a result YA 19 CA will be left with 50,000 instead, and this will be carried forward to future YA, as well as the 2K of unabsorbed losses that was not utilized in YA 18. Okay, so as a result of the carryback, YA 18 will only have 90,000 of the reduced AI so far. All right, now and because YA 2020 there is this enhanced carryback scheme, that is when the complication comes in. So now imagine we are not in YA 2020, so the CA and losses that will carry forward to YA 19, right, will be written as such. Okay, I'm just trying to copy and paste over the YA 19 unabsorbed item to be shown under the YA 2020 column. Okay, and also let's assume that YA 2020 they are in a loss position. So the current year CA for YA 2020, let's say, is 11,000, and the loss that they have is 190,000. Okay, so how does this carryback enhanced carryback system work? Now the enhanced carryback, please take note, it is only meant for the YA 2020 qualifying deduction. So only these two items belong to YA 2020 qualifying deduction. Only these two items you can try to carry back up to these 3 YA. But of course, in this situation, you cannot carry back to YA19 because YA19, you are already in a loss position. It is not meaningful for you to do the carry back. All right. So therefore, you can only choose to carry back YA17 and then followed by YA18 if there's still excess CA or losses. But do take note, okay, do take note, the total amount that you can carry back from the qualifying deduction of YA 2020 is still kept at 100,000, okay, 100,000, right? Do bear in mind, okay? So if I want to elect for the carryback, enhanced carryback system, now what I will do is this. Now remember, you always have to carry back CA first, followed by losses, okay? So I will carry back firstly, right? YA20 CA, YA 2020 CA, I will less out 11K. Now this 11K is from this figure here. Remember, it's only from the YA 2020 qualifying deduction that I can carry back up to 3 years. Okay, I cannot carry back my YA19 CA to YA17 because this doesn't belong to YA 2020 qualifying deduction. Do take note. All right. Now, because you still have income, all right, after deducting 11K, that is when you can activate these 190,000 of the YA 2020 loss, right? So you will less the YA 2020 loss, less the YA 2020 loss. All right, but of course you do not need the whole of the 190 because your AI after deducting 11,000 is only left with 85,000. So at the end of the day, after carrying back YA 2020 qualifying deduction, your AI of YA17 will be reduced to 0. Okay. Now, are you able to carry back further? The answer is yes, because well, CA no more already because you have already utilized in Y17, and losses after deducting 85,000 here, you are still left with 105,000 of unabsorbed loss, which you can still consider to carry back to YA18. Remember, always carry back YA17 first, then followed by YA18. Okay, so for this case, right, even though there is a 90K AI here, and then there is a 105, but unfortunately, you cannot carry back 90K, all right, to make this equal to 0, because according to the enhanced carryback rule, right, the total amount of qualifying deduction that you can carry back is still kept at 100K. All right, so 11 plus 85, and then plus another 4,000 from the YA 2020 loss will make up the 10,000. All right, that is why you can only utilize only 4,000 out of the 105. So 101 is what you are left from the YA 2020 loss. Okay, YA 2020 loss. So after this carry back, your YA 18 AI will be reduced to 86,000. All right. Okay, YA 19, there is no need for you to make any changes because you did not carry back anything to YA 19. And as far as YA 20 is concerned, your total unabsorbed losses, okay, and even CA that you will be carry forward, okay, will be 50K from YA 19, all right, YA 19 CA. This will be carried forward. And then a YA 19 loss of 2K will be carried forward to future YA. And then you will still have a figure of YA 2020 loss. Okay, 101,000 to be carried forward. Okay, so this explains the example that is shown inside the e-text guide on the enhanced carryback scheme. I hope this video will help you to understand roughly how this enhanced carryback system works. Thank you.